What's up everyone, it's Heavy here. Bitcoin and Ethereum are the two biggest cryptocurrencies in the world with a market capitalization approaching $1.3 trillion. And many people think the two of them are the same thing. I mean, crypto's crypto, right? Wrong. Bitcoin and Ethereum are both cryptocurrencies, but there are important differences between the two. Today, I want to go over what cryptocurrencies are, the fundamental purpose of Bitcoin and Ethereum, and how that will affect the assets in the future. First, I will talk about what cryptocurrencies are and how they work. Cryptocurrencies are digital tokens created by programmers, and they share many of the same characteristics of fiat currencies like the US dollar. However, the key difference between fiat and crypto is the blockchain. Blockchain is the distributed ledger used to process and account for all crypto transactions. Now, what does this mean? What is a distributed ledger? Well, ledgers are record-keeping books that keep track of transactions and balances like a checkbook. Having a distributed ledger means that checkbook is spread out over many independent machines. The distributed ledger cuts out the need for a middleman like a bank. This decreases the possibility of fraud, speeds up transaction times, and reduces transaction costs. Now, Bitcoin was introduced in 2009 and was the first blockchain-based cryptocurrency. Since then, the popularity of crypto has exploded, and there are now hundreds of other tokens, some based off of Bitcoin code, others not. Many people believe the future of money is in crypto, and this is evident by the fact that some businesses already accept Bitcoin as a form of payment. We saw this a few weeks ago when Tesla announced they had bought $1.5 billion worth of Bitcoin. At the same time, they also said that they might soon start accepting Bitcoin as a form of payment for Tesla vehicles. Which interesting thing to note is that the price of one Bitcoin is now much more than the price of a Tesla Model 3. Tesla is the largest company to announce such a policy, and that really did a lot to affirm the validity of crypto as a form of payment and as the future of finance. Now, given the relatively small market share of cryptocurrencies, there is huge room for demand to grow. If we saw a significant increase in demand, that would result in a significant price increase in established tokens like Bitcoin and Ethereum. This is why we have seen an explosion in the price of tokens over the last few months, as more companies and institutions have been buying them up, rapidly increasing demand. There is the possibility for a tidal wave of inflows into the space. And at that point, anybody holding crypto would profit tremendously. We are currently past the tipping point, and you can safely say blockchain and crypto are here to stay. So now that I've spoken about what crypto and the blockchain is, let's explore Ethereum and why that is reinforcing the efficacy of blockchain. First of all, Ethereum is actually the name of a network, not a token. Ether is the name of the token that runs applications on the Ethereum network. So when you're buying Ethereum, the token is actually Ether, and Ethereum is the network that the whole thing operates on. This network is designed to execute smart contracts. Now, what is a smart contract? What makes it so smart? Well, a smart contract operates like a regular contract, except it is based on the blockchain. In a smart contract, terms and conditions are defined and a reward is specified for completion. When the terms have been met, the contract will be complete and the transfer can be made. This applies to things like transferring ownership of real estate, completion of work, or trading stocks. These contracts are enforced by machines on the blockchain, and that makes them extremely secure. Now, smart contracts can be compared to a vending machine per se. In a vending machine, if you insert money and select your snack, the vending machine will then dispense your snack. It's an if-then function at its simplest form. If you insert money and select snack, then machine will distribute snack. The smart contract is the same exact way. If you satisfy the inputs, then you will get the predetermined output. This level of utility makes the Ethereum network a valuable asset to the concept of blockchain and cryptocurrencies. Unfortunately, Bitcoin is unable to perform smart contracts as it cannot contain executable code. This gives Ether more utility as a currency and as a point of differentiation between the two. Now, how does that important point of differentiation affect the two coins long term? Long term, some experts have argued that Bitcoin will become like fine art or more of a store of value, while Ethereum will pave the way as a currency. How does that affect the price of each token, though? Well, I think it means the long-term price of Bitcoin will be more speculative, as it is dependent on the sentiment of Bitcoin holders and future buyers. Like a piece of art, it is only valuable if there are people out there that value it and want to pay for it. Conversely, if Ether has actual utility and that utility drives demand, Ether will have a more objective valuation that will be fundamentally driven and less speculative. And we know that speculative assets tend to be higher risk but also higher reward. So over the long term, we could see higher returns from Bitcoin ownership, but also higher risk when compared to Ethereum. To recap, cryptocurrencies are based on the blockchain, which cuts out the middleman. Ethereum is actually a network, not a token, and is designed to create and facilitate the execution of smart contracts. Ether has more utility than Bitcoin, and that improves the long-term viability of the token. Now, whether you like it or not, crypto is here to stay. The concept has been proven on a large scale, and its development advances every day. With more money pouring into the space, it's bound to grow and become part of everyday life. Well, that's all I have for you today, folks. If you made it this far in the video, thank you so much for watching. Subscribe to the channel if you want to stay up to date with crypto current events and also see some of the other things that I'm up to, like my cold plunging. But that's all I got. Thanks again for watching, and I'll see you in the next one.